traditional finance is now they're being forced to accommodate this new kid on the block called crypto.
Mm-hmm.
The big question mark that a lot of the institutional monies, if you will, have is, how do we know this crypto stuff is real?
Ladies and gentlemen, we have been cleared for takeoff. You are now flying high with Travis Lamance.
What is happening, Flying High people? Today I am super excited. We got crypto master Mr. Josh Rhodes from Crypto Yall and CryptoYall.com right here with me. Very excited to talk to you.
Yeah, man. Honored to be here.
So, obviously, you're running a whole crypto company. What led you to such a high level of conviction in the crypto space?
Well, at the end of the day, when you grow up like myself in the middle of nowhere, Alabama,
Mm-hmm.
and you're not financially literate and really one generation removed from extreme poverty, I remember in my house there was a book on the shelf called Rich Dad Poor Dad that a few people have heard about, and I ended up reading that in my early 20s, and it really obviously changed everything. It helped me at least begin to start understanding money, quote unquote.
Right.
The deeper I got into my adult, parenthood, being a husband, and understanding, how hard it is to trade time for money,
Mm-hmm.
and realizing that the energy that we have and the limited 24 hours a day that everyone has is getting transferred into some kind of money. And I started, I guess, learning when the Bitcoin white paper came out right after the great financial crisis. I was putting a for sale sign in the yard of a house that I was trying to flip the day that Bear Stearns went under. And I had no idea that the Bitcoin white paper was about to be released. And then a few years later I did. I was like, oh, wow. And so ever since that kind of revelation with Bitcoin, I actually invested in Bitcoin and Ethereum almost 10 years ago for the first time. But even then, I was like, well, maybe I'll make some money with this.
Right.
But what I've learned is it's a whole new type of money, not just currency, and understanding that, at the end of the day, everyone watching or listening to this it's like you're running up a hill, but it's all mud, and you're like a cartoon and your feet are just spinning. And I wanted a more firm foundation. And so crypto specifically for me, and if you really talk about Bitcoin anchoring that movement, changed the way I look at money, period. So my conviction has followed the innovation.
It's a good analogy of running up the hill in the mud, though.
Yeah. I feel like Bugs Bunny just spinning. Yeah.
Spinning your wheels and
Yeah.
not going nowhere. Huh?
Yeah.
So, obviously on social media, there's a ton of crypto influencers out there, but your approach with the crypto flywheel really got my attention. It wasn't just kind of a hopium strategy. There's actually thought and logic behind it.
Yeah.
You're not hiding behind a fake alias and all this stuff. How did all that come about to where you wound up with the crypto flywheel and the program that you're operating?
Yeah. Ultimately, the crypto flywheel method is I guess, a rendition, or kind of me synthesizing a principle that I learned from the author Jim Collins, who wrote Good to Great,
Mm-hmm.
which was a business book where he analyzes all the great companies of the world and history. And he identified that all those great companies had this flywheel principle, this thing that creates momentum and prosperity and continuation. And when I first got into crypto, when you step out of the confines of the Bitcoin Ethereum sandbox, you start to find all these Lamborghini Abu Dhabi tech bros that have, a froggy meme coin or an alien snot-nosed monkey NFT that you're supposed to buy. And things got really weird really quick. And I was just sitting there going, look, I'm an Alabama boy. I'm a dad. I'm boring. I just want to build wealth, create retirement, help my community, my church, and, provide for my family long term. Where are the other dads at?
Right.
Where are the other business owners?
Mm-hmm.
And the flywheel method is just something, honestly, I made life-changing money in my first cycle with one specific asset. And I went to a Waffle House, and I was just sitting there kind of reflecting, going, did I just get lucky? Or can I keep doing this?
Right.
Because I have owned other businesses. I've operated businesses, and they've been fun and rewarding. but I'd never had a more lucrative side hustle than crypto.
Right.
And I thought there's got to be a way to systematize this. And so Jim Collins came to mind because I'd used his flywheel principle in all of my businesses. And I thought, okay, cash flow, appreciation, leverage. Those are the hallmark characteristics of a great financial asset class. How can those three play together in continuation? And so where the flywheel method, what it does is it gives you a framework or a discipline of decision making on how to deploy your capital, but have capital efficiency rather than just get stuck in like a buy, hold, and hope. I hope my Froggy coin goes up to $1 million, right? Instead, what if I could earn a premium on my Ethereum that's just sitting in my Coinbase account, maybe earning 4% if I stake it for 6 months locked up? How could I earn, 84% APR on that? How could I create yield and cash flow and passive income? And then how could I double that back down into more accretive assets? So it's a more methodical approach to growing your net worth.
And it's scalable and teachable too. So
100%. And everybody who sees it, they realize it's not rocket science. It's a discipline, but there are two things required to roll with the flywheel. You got to have crypto literacy skills, which is just, knowing how to use self-custody, knowing when to use custodial accounts, central exchanges, knowing how to use hot wallets and cold wallets and DeFi applications, et cetera, the buzzwords and the lingo. And then the second thing is market cycle knowledge. The flywheel isn't just this impermeable, invincible strategy. It's just a framework, much like a tool or a firearm. You've got to know how to use it. You got to know how to sword fight. And so understanding where you are in the market cycle determines how you use your flywheel.
Makes a lot of sense. Whenever I first started going through your program and learning more about the crypto space, I was surprised to learn how much you can just use the same chart analysis. There's some different aspects you can get into, but chart analysis is very similar to what it is on a regular stock. And people that know how to read a stock chart, does that not transfer over really parallel to the crypto? Basically the exact same thing, or
yeah,
some
absolutely.
nuance differences maybe?
Yeah, all of the funny words and lingos, everything from Fibonacci's to weekly moving averages and exponential simple moving averages, all of that stuff. Digital assets are the same. They just have a 24-hour, 7-day-a-week clock, and their life cycles are different, I would say. So you're going to obviously get a lot of volatility, which is ironically where a lot of the wealth is built. Like, people are afraid of volatility because they were raised to invest in S&P 500 index funds or a mutual fund that gives them, 10 to 15%, annually. But the volatility is a feature, not a bug. And a lot of the charting lingo that a lot of people get scared of and tripped up on, sometimes it's a smokescreen to make all the day traders sound smart. But the stats are pretty, indicting that less than 3% of day traders are actually profitable. I recognized that early, and I also didn't want to be glued to the screen all day, watching 1 minute candles. So position investing in crypto can be just as lucrative and not as quote unquote stressful as a day trading stocks, because you've got the volatility there, and if you know where to put your boat in the water at the right time in the cycle, you can have great cost basis.
So one of the tokens that you're really hot on, that you're talking about a lot, and you seem to have a real high conviction on, is Chainlink. What makes it special, and why do you like it?
Yeah, there's 6 hours of answer there. Bottom line is, especially where we are right now in the timeline, is depending on when people are listening or watching this, we're at the point in history where tokenization, blockchain, Web3 technology is being adopted, or has been adopted really, by Wall Street and sovereign governments globally. It's where TradFi, or traditional finance, is now they're being forced to accommodate this new kid on the block called crypto. The big question mark that a lot of the institutional monies, if you will, have is, how do we know this crypto stuff is real? How do we know what you're saying on that digital screen is what's actually being backed up in asset value?
Right.
And so one of the great things that Chainlink does, and I'm not sponsored by Chainlink, I just own a lot of it. It's my largest holding. Is they offer proof of reserve because of what they are, which is an Oracle service. So what an Oracle service does is it acts as like that um, Grand Union station, the central station of information, and they take non-blockchain information, non-smart contract, non-crypto information, and they fuse it into blockchain or layer one blockchain smart contracts, so that, for example, one of the biggest, I guess I would call it, secular use cases right now are just things like polymarket.com, where people go and gamble, literally bet on the odds of the government reopening, or rate cuts happening, or who's going to win the World Series. Well, all of that's facilitated on blockchain, primarily with Polymarket on the Polygon layer 2 blockchain of Ethereum. Well, how do they know when the government opens back? How does a blockchain know when a rate is cut, or a game is won, or a UFC match happens? There's an Oracle service feeding that data in real time all the time. And so Chainlink has a special seat at the table, even with the administration and the new Clarity Act and market structure bill. They are the dominant monopoly of Oracle services. So from a history standpoint, it's my long bet.
I got you.
Yeah.
You've talked about what time people are watching this when you put your boat in the water. Someone that's not in the industry or knows a lot about charts, what's maybe two or three charts that, if someone just wants to have at least a high level pulse of where the market's at, what's maybe two or three charts they could keep an eye on to get a little bit of a
Yeah.
idea where they're at?
If I was a complete noob in crypto and I didn't want to get too stressed out,
Mm-hmm.
I would definitely watch the Bitcoin chart. It's the canary in the coal mine for the greater crypto market. It is the largest asset in that market cap, the total market cap of crypto.
Mm-hmm.
So it's important to know what Bitcoin's doing. I definitely watch the Ethereum blockchain or Ethereum chart, because it's the largest, what we call altcoin, alternative to Bitcoin. I would also watch the S&P 500. Bitcoin is basically a high beta play to the S&P 500, so it pretty much follows the S&P, and it's good to know. And then the Russell 2000, which is again, those are two stock market
Right.
indexes or indices. I would watch the Russell 2000. When the Russell 2000 sees expansion, those are the 2000 smallest companies in the Russell 3000 index in the U.S. publicly traded market. And when those see expansion, you almost always see altcoins see expansion, and that allows you to kind of know, at least be one step ahead of the general market.
Mm-hmm.
And then I would also watch the DXY, which is the U.S. dollar index. It's the strength of the U.S. dollar against a basket of other global currencies like the euro, the yuan, the yen, etc. I think the Swiss franc. And when the DXY is trending downward, typically risk on assets are trending upward. Last one I would say is Tether Dominance, USDT, which is the largest stable coin, the one-to-one dollar but crypto token on the planet. It's a safety harbor for most people.
Mm-hmm.
And so when you see USDT.D, the ticker symbol, if you use the dominance of Tether as a weather vane, when it's going down, typically that means people are rotating out of stable coins and into crypto.
Right. So whenever it's going down, they're going up, and when it's going up, they're going down.
It's not
Typically.
perfect,
Yeah.
but typically.
Weather vane
Yeah.
on it. I
Mm-hmm.
like it. You kind of touched on this earlier at your Waffle House epiphany. Let's say you do make a good investment, you get a bunch of gains in there. What are some of the things you should do with those gains to avoid just rotating them directly back into fiat currency?
I think there's actually an appropriate time to rotate into cash,
Mm-hmm.
especially, again, that kind of goes back to the whole market cycle knowledge thing, because crypto is notorious for having very, very, very malicious bear markets. Like, you can have a crypto that's down 90, 95% and sometimes may never come back. that's the risk curve for a lot of the smaller and mid to small cap tokens that you invest in. If you're getting big gains, you need to have a profit taking strategy, and it needs to move into cash equivalency.
Mm-hmm.
However, over 5-year cohorts, Bitcoin is a superior store of value. So depending on the individual listening to this, let's just say they invested with me in Chainlink back in the previous cycles when it was at 89 cents,
Mm-hmm.
and their cost basis, and then Chainlink goes to $52 subsequently, which it did, and they cash out on the way up.
Mm-hmm.
Real disciplined. They were out at 20, 30, 40, 50. They were taking chunks out,
Mm-hmm.
and they just they played it perfectly, which
Mm-hmm.
few people do. And now they're in cash, and they've got all this money, potentially life-changing money in cash, quote unquote. Well, if they play their cards right in a bear market, Bitcoin will, while altcoins might drop 90, 95%, Bitcoin will correct between 50 and 70%.
Mm-hmm.
And then from there go to new all-time highs over a 3-year period. So if you can hold 50, or if you can be patient in holding cash, like being things like I practice infinite banking concept, for example. I'll hold as much cash there as I can, and then leverage out of there and move into Bitcoin. When I'm in that ballpark arena, I know Bitcoin's going to lead the bull market. It's the sponge of liquidity first. It gets the first rotations
Right.
from the global liquidity cycle. So that's kind of a very basic rundown. Obviously,
sure.
there's things like real estate and tax liability offset opportunities out there that you can take advantage of as well.
Well, take hours to explain, and
That's right.
a lot more complicated, and
Or
that's
just
when
buy a plane from you.
yeah, just buy a plane from me and appreciate the heck out of
That's
it.
right.
This episode is brought to you by Haven ASG. Looking to buy your first private aircraft or upgrade your current bird? Travis and the team at Haven Aviation Services Group has you covered. From finding the jet of your dreams to selling your old model, our expert brokerage teams handle every detail, connecting you to the right deal for the right aircraft every time. Visit havenasg.com/flyinghigh today for your custom experience to begin. Again, that's havenasg.com/flyinghigh, or just click the link in the show notes. Now back to the show.
So I don't think most people understand other implications of the blockchain technology outside of the currency finance side of it. Can you touch on any projects, like one that I own that I like to play with is Realio?
Yeah.
What does it mean to tokenize things on the blockchain outside of finance?
Yeah, I think the best way to think about it is almost like democracy. It's a way to democratize the ownership of assets without using the old-fashioned way. For example, let's say you own a 30-story apartment or commercial building in a metropolitan area, and you want to sell, maybe you want to sell 30% of the ownership, but you want to maintain the other 70, or you want to maintain access to that equity, but you want liquidity out of it. And you don't want to go refinance it. You don't want to do the whole interest rate game. Maybe interest rates are too high and you got this really awesome original mortgage rate, whatever that original loan is. Well, in a tokenized scenario, and this is one of about 1 million utilizations, you could tokenize 30% of that ownership. And you could say, basically, hey, I'm going to allow 30% of my building to be sold to up to 100 people. And your representation of ownership will be this token or this NFT. An NFT is a non-fungible token, meaning you can't just trade one for one. They're unique. They represent, floor 58 that you bought from my apartment or my condo or my commercial building. And so there's ways to democratize ownership in that regard. There's a great commercial or residential application. One's called Lofty out there where, maybe you want to get into real estate investing. Maybe you want to earn, 12% a year cash on cash, just like the rich dad, poor dad guys, the bigger pockets guys do, but you don't have, $80,000 for a down payment or whatever you need. You can buy a fraction, a $50 piece of a a 3-bedroom, 1-bath ranch in Iowa that's already rented out and get rent on that $50 piece of equity.
Crazy way to use it.
Yeah. So it's an interesting way, and those are just, two top of the mind ways that you're going to continue to see how people do this moving into the future.
I think as people dive into this rabbit hole on blockchain technology and see what it does, they start talking about tokenizing all these different debt pieces, and it just seems to cascade into everything where it's hard to find the line where not everything's going to wind up on blockchain at some point.
Yeah, well, even if you take the Genius Act, I could argue that that's a tokenization of U.S. debt. Now, anyone in the world who owns a stablecoin like USDC is required to buy X percentage of U.S. treasuries. So if you live in Bangkok and you have, 80% of your net worth sitting in USDC stablecoins because you trust a United States stablecoin company that's minted out of, Silicon Valley called Circle. Well, Circle's required to buy U.S. treasuries. So the United States government basically has just duped the entire world into buying more debt and funding the money printer. But you could also tokenize an airplane. If you wanted to VRBO an airplane and have 8 guys, you could tokenize an airplane and they all, own it. But it's all backed up and proofed on blockchain immutably.
That may or may not be in the works.
There you go.
So what's your take on fiat currency and where do you think it's headed from here?
Well, there's a great slogan in Bitcoin world, Bitcoin has no top because fiat has no bottom. And true. As far as central banks go, and as far as the United States dollar hegemony goes, the fiat's going to continue to lose its buying power exponentially. There's a great website that everyone needs to go look at called WTFHappenedin1971.com.
It's a great one.
Great one. And it's just a litany of an endless scroll of data that shows all of the bad things that have happened in our society, not just economically, but statistically, when it comes to just health and human services. Fiat causes wars, it perpetuates wars, it creates health crises, and it's all because constant debasement of a dollar makes the human race do crazy, desperate things to either cope or try to catch up. And so hard money assets like Bitcoin, I think, and many believe, will fix a lot of those problems.
One of the first things I read that opened my eyes a little bit more to this wasn't just a fad or something weird is the Bitcoin Standard book.
Yes.
And it does a really good job of explaining
must read
all this stuff we're talking about.
So, Bitcoin Standard and the Fiat Standard. He wrote a sequel. So Safidian Amos is the author. He wrote the Bitcoin Standard and then the Fiat Standard. It just gives you a good history of money or currency, and kind of know how to act like a futurist with your money.
It's kind of crazy how he goes through everything from beads to rocks to like all these random things we've used for currency over the years. It's pretty wild. It really makes you understand the dollar more.
100%.
So you've touched on a couple of times the Genius Act and these different pieces of legislation going through the U.S. government right now. One, do you think they're going to make it through the government and be passed into law, and what timeline and what impact are those going to have on the crypto markets?
Genius is law. That's good news. That's mainly a stable coin thing, which they strategically passed first because of what I've already said when it comes to the dollar hegemony globally now. They've increased the buyer pool of U.S. debt, so they wanted to handle that first from a priority standpoint. The Clarity Act, I think, could potentially be a law in the next 3 months. I would give it maybe maximum 6 months. They're wanting to get it done in the next 6 weeks. I don't see that happening because governments rarely fulfill their promises. Clarity Act's going to be here's my way of explaining Clarity. Clarity Act is, hey, y'all got clear on stable coins over here with the Genius Act. The Clarity Act is everything else. How do we view, the new token that comes out
Mm-hmm.
that has a utility that tokenizes airplanes, and they're centralized, but they're moving to be decentralized, and they've got a runway for that. And how do we view them? Who is the government agency that oversees them?
Mm-hmm.
Well, we know that the Clarity Act, for the most part, is going to put most of all of crypto under the CFTC, the commodities regulator, as opposed to the SEC,
Mm-hmm.
which is the securities regulator that has given us, living heck the last 8 years as crypto investors. And now that dragon's been slain. And then the market structure bill actually probably will end up being the most important, because the market structure bill is one of those that will say, hey, all of the manipulative behaviors that the market makers and central exchanges like Binance, which is an offshore exchange in China that manages 55% of total crypto trading volume. If you
That's
think about
crazy.
that, it's wild.
That's a
It's
lot.
it's a wild monopoly. They, with one wave of their hand, can manipulate prices with intentional wash trading.
Mm-hmm.
Well, the market structure bill or act will 70% put a halt to that and really mute their ability to do that. And there'll be a lot more domestic regulations that if Binance wants to serve U.S. customers, then they're going to have a more regulated Binance.us entity.
And so their monopoly on it is that a big part of why they can wipe out these longs and shorts
That's right.
really easily, and
That's
they
right.
go chase that those liquidities that are out there?
Yeah, and it goes back to why retail investors like us, like your listeners, do not need to custody your crypto on exchanges, because those exchanges, like banks, are using your assets to
Mm-hmm.
do their deeds. And so a lot of times central exchanges will take all of their Solana
Mm-hmm.
and send it to 3 or 4 of their buddies in the market that are
Mm-hmm.
market makers. These are prop trading firms. And these prop trading firms will go, oh, I see Binance. I see that you've got record long leverage trades your users do, and they're getting a little out over their skis. So we're going to sell this, and we're going to dump the price. You get all the wiped out leverage money. We keep a little piece of the pie because we've got a handshake agreement, and then they send all the assets back to Binance as if they were, they never left.
Right.
All the while, Binance is showing you've got all your Solana sitting there,
Even though it's out being used for that.
even though it's out there being used. So there's a lot of smoke and mirrors that will be put to a halt, or at least again blunted by the market structure bill.
And that's wild. You don't realize all the
It's gross.
games going on in the background with
That's
that.
right.
Obviously, the Trump family is really heavily into all the blockchain technologies, a lot of their own cryptos. What do you think the angle is on that, with Trump being in the presidency, Eric being highly involved with it all? To me, being highly involved with the crypto space, I think it's very bullish for
Sure.
us. I mean, nothing but bullish. But do you think it's healthy overall? Where do you think it's going?
I mean, I think at the end of the day, you got to ask yourself, how do you feel about opportunism?
For sure.
I think World Liberty Financial and the Trump organization, at the end of the day, I mean, I'm not one to judge a man. They might truly have some level of conviction. I think the Trump sons probably do see the future as a blockchain future. They were, even before this administration took power, they were vehemently fighting against the SEC and Gary Gensler, the former chairman there, who, again, was an adversary to crypto. Google Choke Point 2.0, if you're listening. And I would say that the Trumps are the anti-hero in the comic book of crypto.
Right.
They're not a good guy, but they're not a bad guy. They're taking care of themselves.
Mm-hmm.
But it's like, all right, I'm a little fish. I'll swim in the wake of that whale.
For sure.
And they'll plow ahead, and I'll be able to take advantage of the forced innovation and legislation that they will cause in the industry.
Yeah, so even though they're going to benefit from it, so is the market at whole.
Yeah.
So
if I'm a Trump meme coin token holder, they're not thinking about me.
You don't think so?
They're not worried about me. But if World Liberty Financial has an incredible amount of Ethereum, they're incentivized to make sure that the fiat system runs the price of Ethereum up. So I want to have some kind of exposure.
Makes sense. What are some of the real common misconceptions you hear about the crypto market that floating around there on social. I see the widest spectrum of opinions imaginable on there. What's some reality for people?
Well, the biggest one, the laziest one, is that it's all a scam.
Yeah.
You hear that from, the Charlie Mungers of the world to the Jamie Dimons of the world, the Larry Finks of the world. It wasn't 4 years ago when, the BlackRock CEO was saying that Bitcoin was a pet rock, and that Jamie Dimon, the CEO of the largest bank in America, said it's worthless, and that he would fire anyone on his staff that was innovating with it. All the while they were building blockchain. And now BlackRock's Bitcoin ETF is the most successful ETF in the history of Wall Street. You got to have a sober mind and realize that a lot of the chicanery in the ethos or the social media world or in the media world sometimes, again, is smoke and mirrors. But then there's also retailers who are out there who have been scammed, and a lot of retail investors have I would call it a trust without verification approach to crypto,
Mm-hmm.
which is unfortunate. But I've talked to hundreds of people who've been scammed by basically a catfish scam or crypto pig butchering. But there's fraud in every asset class.
For sure.
But because of how innovative crypto is as a financial technology, the scams are very innovative, and so social engineering is easy to fall prey to if you're not on guard. The other thing that I would say, or I guess myth that I would dispel, is something I kind of touched on earlier, which is the volatility of crypto is a feature, not a bug.
Mm-hmm.
Depending on your life stage and your goals and your financial landscape, it can be the most rewarding asset you'll ever touch. If you're 82 years old and you have a nest egg, you don't need to put 3/4 of it on the Trump meme coin.
Right.
So there's some judicious, sober strategies that have to be taken into account that a lot of, unfortunately, retail investors aren't prepared for.
I think a lot of it is the technology is so new, and a lot of people are so worried about looking dumb that it's real easy to go to them and throw a bunch of jargon at them that okay, this guy must know something.
Oh yeah,
And so they're really easy to take advantage of if you're being unscrupulous about it.
that's right. And some people are shiny object chasers,
Yeah.
unfortunately.
Squirrel trails.
100%.
I have to remind myself not to chase squirrel trails a lot.
We're all guilty.
So for those people that haven't got into crypto, maybe own some Bitcoin through an ETF or something, but they want to get more serious about it, me personally, I highly recommend you just go join Josh's program. It's amazing. I've been in there for a year and a half now, and phenomenal. So I'll start with that. But outside of that, what are some things that someone could learn to dip their toe in the crypto waters and start becoming a participant instead of an observer?
Yeah, I would say that there are. I would anchor the whole idea around 3 types of accounts that you need in crypto. That's a little different than traditional equity trading. Number one, you need a central exchange account. They, Coinbase, Binance, Kraken, Gemini, whomever, they don't need to be your bank, but they need to be, central exchanges operate as an on-ramp and an off-ramp, in my world anyway. They're not meant to be my storage vault. They're meant to be my way of getting from fiat banks into crypto. They're like a happy medium place. They have a limited catalog of crypto. They're what we call the secondary market.
Mm-hmm.
The secondary market, it's kind of like buying your crypto on eBay. They have they do scrutinize, but they also kind of play inside baseball with the crypto protocols that want to list on them, and they've got these sometimes ambiguous or lopsided priorities on who they list and who they don't list. And so they're corporations. They have they're buying Super Bowl commercials and stadium placards. So that's their role. They're publicly traded. They have shareholders to take care of. They're going to charge you a bunch of fees.
Mm-hmm.
Then there's self custody. That's where the other 2 accounts come into play. You need a hot wallet, and you need at least one cold wallet. A hot wallet is a software. It's literally a Google Chrome browser extension, like MetaMask or Phantom or Rabby or Coinbase Wallet even is a self-custody wallet. These hot wallets allow you to have access to the primary market. The primary market is the entire galaxy of crypto, where you can go swap one token for another on hundreds of different decentralized exchanges. Those decentralized exchanges, they're pools, they're liquidity pools. They have the vaults, they have the supply of all the tokens you can't buy on your central exchange. And that's a great place to not only save on a little bit on fees, but be able to access tokens that have yet to make it to their central exchange listings and have upside. And then cold wallets are security, security, security. A cold wallet is literally a physical wallet, and there's a lot of innovation even in that part of the industry. Don't buy it off of eBay or Amazon. Buy it directly from the factory. You don't want to buy some tampered with malevolent hardware. But a hacker has to be in the same room with me pushing the physical buttons on my cold wallet in order to move my crypto, or have permission in a permissionless ecosystem to move my crypto. It's kind of like the nuclear football that the president carries. These warheads can't launch unless that thing is utilized. So the cold wallet is your bunker money. It's where you put everything that you're not actively managing. So that's what I would tell a new person. Have those 3 accounts and be ready to use them.
The cold wallet was going over my head a little bit, so I finally just bought one.
Yeah.
And I was like, I just need it to play.
Yeah.
Once you have it in your hands and you play with it a little, it makes a lot more sense than trying to
100%.
explain it to somebody.
Yes.
It's not rocket science once you have a hold of it, but it can be a little ambiguous and hard to understand. What do you mean pushing buttons on? I was like, what the hell are you talking about?
Yeah, well, there's a funny quip there. I've done over 1,800 one-on-one Zoom calls with crypto investors. I would say at least 40% of them, I would say, hey, do you have a cold wallet? And they'll say yes. And I'll say, it's unwrapped on your desk, isn't it? And they're like, and they hold it up on the Zoom camera. It's excellent.
Yeah. The first time I talked to you, you asked me that.
Yeah.
I didn't have one at the time. I'm like, oh, I guess I'll need to get one. And I went on playing with hot wallets because I learned the hard way.
Yeah.
So I played with hot wallets for a couple of months, and I'm like, I really need to figure out what this cold wallet thing is.
Yeah.
You just need to do that up front.
It's
not as big a deal as it sounds like when you try to explain it.
Yeah.
We hear people talking all the time about a crypto bear market, crypto bull market. You flip through the social and the video you watch is it's a bull market. The next video, it's a bear market. It's the constant.
Yeah.
What is kind of the definition of a bull and a bear market, and what's your take on where we're at in that cycle of that market right now?
That's a deep library of content there. At the end of the day, a bull market, obviously, in a bear market are trends.
Mm-hmm.
They're that are based on certain time frames, or whether that be daily, weekly, monthly, yearly time frames. Now, I'm under the persuasion, and this is one of those contradictory pieces of information that you'll hear from one influencer to another.
Mm-hmm.
When Satoshi launched Bitcoin officially in 2009, that was either strategically or coincidentally launched or overlaid coming out of the 2008 GFC, the great financial crisis. And that's when all of the really first stimulus and, if you remember TARP and all of the post great financial crisis stuff started to try to get repaired through fiat stimulus and quantitative easing. That overlaid with Bitcoin, and then the Bitcoin white paper and Bitcoin software programmatically has this thing called the halving, and approximately every 4 years, it's actually based on the amount of blocks that are mined, but regardless, it's almost every 4 years. Well, people started thinking, wow, it's the Bitcoin halving cycle. But it's actually the business cycle. It's actually the cycle of global liquidity based on things like purchase manager indexes and M2 money supplies and things like that allow the money, literally, of the world, the economies of the world, to have that rotation of capital. Well, based on that, though, business cycles change. They just didn't a whole lot for 15 years. And so now at the time of this recording, we're at the pico end of a business cycle. And there's a huge debate, actually. A lot of people think, no, this is the beginning of the bull market. even though Bitcoin's, gone up 8x, 10x since January of 2023. They think this is the beginning. I happen to believe we're in the bottom of the 8th inning. There's still a huge 9th inning to go, but then there'll be a crash, a reckoning, a reset. And then from there will be massive quantitative easing again for the first time in a long time. They're halting quantitative tightening at the Fed. And so ultimately, that's when I say market cycle knowledge is huge, because in 2021 November, that Thanksgiving, everyone was buying cryptos and NFTs. And then the next 2 weeks were all the lemmings falling off of the cliff into the ocean because the bear market set in.
That's crazy. That would be very confusing to people trying to understand it, that it was just coincidentally overlaid. The 4-year cycle just happened to be overlaid. And I think you being in the market for a long time, you've brought this up before, but when you get towards the end of it, they start kicking the deadline out.
Yes.
Now it's this.
They move the goalposts.
Yeah, constantly moving it. And
yeah.
Right now, the big thing everyone's talking about, no, we're in a 5-year market cycle
Sure.
and all this. And I suspect that's, old news. We hear that every time it goes around.
What's going to be funny is the 5-year guys will probably end up being correct on the price and the point. But what they're not seeing is a massive Grand Canyon crash in between now and then. And they're not talking about it actively enough. And it's going to be something like, a Japanese yen carry trade that most crypto bros are just not even seeing happen. And they don't understand that crypto is really kind of like an amplifier, or kind of that leaf out on the end of the branch that's like, even a smallest wind blows, that leaf violently moves. If the global equity markets unwind because of sovereign debt wars between the U.S. currency and a Japanese currency or something like that, there's nothing crypto can do. It's not that durable yet. And so there will be a crash in equities and in crypto. However, what we're looking forward to here is we have a stated halt in quantitative tightening on December 1st for the first time. We've got the Federal Open Market Committee being basically packed by the Trump administration at this point. There's a lot of governors that they're voting governors that they're replacing with dovish governors. And of course, the chairman, Powell, will be replaced or retiring in May. So there's enough time for us to have this blow off top, to have this cratering crash, almost like a reset that we saw in April of this year, and then maybe a 10 to $20 trillion quantitative easing stimulus bomb hit the market, and then boom, all the 5-year guys are going to think they're geniuses.
Right. And a lot of that's going to be driven by the fact there's midterms, right? Like, they're not going to want to go into midterms with a terrible economy. So
that's right.
You're thinking, I think the same. They're going to take out all the stops, make sure that economy looks badass when we go into the midterms.
It's the number one issue. And the midterms typically for the incumbent are bad, and they're going to have to really pull a rabbit out of their hat to win the I guess the political dominance back.
Right. So whether the 4-year guys are right or the 5-year guys are right, as long as you're exposed in the market, we all win.
That's right. And if you're really smart, you can double dip.
Right.
You can take advantage of a blow off, move to cash, and then wait for a crash and move back in. And I think the bear market, like the last bear market we had, was like 500 days for a lot of tokens.
It's a long time.
Which was just a desert. Like, I was buying Chainlink back at $4.
That's crazy.
After, $52 all-time high.
That's wild.
And so I've double dipped on Chainlink now between cycles, and I'll be able to do that probably again, even in the next 6 months, because this next bear market has a potential of being abbreviated because of the emergency activity that the Fed will take.
And that's one thing that you talk about that I don't think a lot of people think of is they hold on that downside, and so their portfolio goes up. I made $1 million. Well, you didn't make nothing if you didn't exit. And,
that's right.
And take advantage of that. So
yes,
I really like how you touch on that a lot, on making sure you're taking profits on the way up.
Yeah. And
not just holding that and thinking it's going to go up forever.
It's the chief cardinal sin of a retail investor is just round tripping their investment.
Yeah. That's, if I didn't have trusted people that I was watching on that. That's what I do. Oh, it's going up. It's going
Yeah,
up.
yeah.
We're going to hold. Yeah. So if someone listening right now wants to participate, one, due to where we're at in the market, is it a good time to jump in? If it is, they got 5 to 10 grand to invest into something. What direction should they look?
Well, again, relative to when they're listening to this,
Mm-hmm.
if you're this late in the market, the good news is that large caps are in a great spot.
Mm-hmm.
They're very investable right now. They're your best risk reward ratio. Your Solanas, your chain links, your Ethereums. They have varying multiple opportunities in terms of gains, but there are also things that if you time it wrong, they're durable and they're multi-cycle assets that aren't going to disappear like your
Right.
alien frog coin.
Mm-hmm.
It won't exist after this.
So if you buy $5,000 worth of Solana right
Solana,
now and it
yeah.
goes down to $1,000, as long as you hold it, you're going to get it back and then some eventually. It's
Yeah.
just a matter of time frame, right?
Yeah, because of its legitimacy, its total market value, its total value locked, the adoption. Wall Street's got ETFs. Like there's just a lot of, I guess I would call buoyancy for the next cycle.
The information that has came out over the last week about Sui is pretty exciting too. That I still can't quit saying Sui, but
Sui, yeah, us Southerners have bad ways to say things. The founder says Sui, so I'm going to start saying Sui. But yeah, that's a great example. It's the 20th largest market cap, depending on the day, but it's like 10 times faster than Solana in terms of transaction per second. So huge volume happening on it the last 6 months. It's an exciting one if you want more volatility, more upside, etc.
This episode is brought to you by Haven ASG. Looking to buy your first private aircraft or upgrade your current bird? Travis and the team at Haven Aviation Services Group has you covered. From finding the jet of your dreams to selling your old model, our expert brokerage teams handle every detail, connecting you to the right deal for the right aircraft every time. Visit havenasg.com/flyinghigh today for your custom experience to begin. Again, that's havenasg.com/flyinghigh, or just click the link in the show notes. Now back to the show.
tell us a little bit more about Josh. One thing that I wanted to hit you up on is watching you on your Zooms. I always see your 2 Comma Club awards on the wall back
Yeah,
there. That is something that I think is just really cool. And
yeah,
nerds like me that know what that is,
yeah.
it's a cool accomplishment. What was it like going through the process to earn one of those? What was it like getting one of those?
Oh, it was awesome. I mean, it feels good. Everybody thinks I'm some kind of recording off.
Because they
Yeah,
do look like a
artist.
record
Yeah, they look
artist
like big
thing.
golden records.
Yeah.
It's great. It's fulfilling. There was a time where I was working in nonprofit,
Really.
20 something years ago, and I thought, wow, I'm lying to myself. I'm just an entrepreneur and a sales guy. Like I really love creating things.
Yeah.
The whole Ayn Rand, Atlas Shrugged approach to life. I want to be out there in the market creating things. And so I've done everything from real estate investing to real estate agencies, like for real estate agents and lead generations, agencies, consultancies for different businesses, revenue recovery, back office services, just a lot of different things. And yeah, every time I've done it, I've done it through social media, Web 2.
Mm-hmm.
And so Web 2 has been good to me. And now I'm able to utilize Web 2 to teach people about Web 3. And that's the rewarding part of it. And I'm a red-blooded capitalist.
Mm-hmm.
And I believe that capitalism is the greatest arbiter of freedom in the West. When you want excellent experiences and lifestyles, you want to pay someone who's excellent at what they provide so that you can have that lifestyle. People who pay attention. And so at the end of the day, if you're trying to be in the top 5%, whatever that means for your
Mm-hmm.
life, capitalism is a huge, huge opportunity to make that way.
So the democratized nature of crypto and self custody and self accountability, do those kind of tie into your viewpoint on capitalism?
Yeah, I mean, it's very libertarian at the end of the day.
Yeah.
It's meant to be a trustless system. I mean, Bitcoin was basically, I mean, even though it was thought of probably 20 years before it was launched, when it was launched was in protest of the too big to fail banks.
Mm-hmm.
And having to have these intermediaries that govern our peer-to-peer transactions. There's countries in again, Choke Point 2.0, debanking an individual, or even in Canada during their protests with the truckers, governments, literally shutting people's banks accounts down. Crypto is a way where freedom can ring, but we got to train civilization on how to use it and not be married to the state for their financial independence.
Do you see much risk of this being kind of the Trojan horse into like the digital ID stuff and all those things that we keep hearing stories about?
Yeah, it can go both ways. That's why we've got to be very careful with our vote. And I'm very thankful for the Genius and Clarity Acts, because they are anti-CBDC approaches, central bank digital currencies. But, at the end of the day, we're going to serve one money system or another.
Mm-hmm.
We're not going to be just this moneyless civilization. Well, maybe we will be, when AI just does everything for us. I don't know. Robots and AI could just. I was listening to the Musk Rogan, the latest thing, and he was talking about, not universal basic income, universal high income.
Right.
Because we have all these interfaces with AI that does everything. I mean, crypto will enable that. Yielding, looping yields infinitely in trades, everything, because you've got an AI that'll do it for you. Who knows? That might be where we're going, but ultimately, having a liberated system that is autonomous from the state is what crypto is all about, and what I support personally in my philosophy.
Right. And he did touch on some interesting things in that, where basically the cost of production of goods and services and all that is going to drop so drastically low that things that we have to go and work and save our money and scrape our pennies for right now to go and buy, all that cost is going to come down so much that anybody can have whatever they want.
I mean, it's like the good old days when you heard your dad or your granddad say, "Yeah, I used to pay a nickel for gas," right? Like, we can't even imagine that. I think it's just going to revert the cost of goods sold for us. Yeah, for sure.
I saw an article this morning where they announced that they stopped production of the U.S. penny.
Yeah,
that's pretty wild. So now everything's got to end in a nickel.
The beginning of the end.
Yeah, exactly. Because what is the debasement down from that 1970? I don't remember if the measurements from 71 or from the 30s, but it's down like 96.
Oh yeah, it's mid 90s. Yeah, for sure.
That's crazy.
Wild.
Do you do anything for fun outside of crypto?
Oh well, I'm in the throes of a household.
Yeah.
Full of daughters, and so when I'm not consulting or teaching or creating content around crypto, I'm at volleyball games, I'm at SEC football games, I'm at AD Pi sororities, parent weekends, or theater plays at the high school. So I'm full court press dad right now. My wife and I, we love being a mom, we love being a dad, and we have fun with that, and we spend a lot of time in our community, and we try to give back as much as we can.
That's cool. One thing that I would say you touched on a minute ago was leveraging Web 2 to teach people about Web 3.
Yeah.
And in your program where we can all chat with each other in there, it's a lot like how I remember trying to teach my dad how to use a computer. Like, it's, well, you turn it on and then this is an email, and so a lot of it in there is Web 2 terminology people are trying to plug into Web 3 operations, and it's like, no, that's and so it's a really good playground for people to go and get literacy and educated about what the heck Web 3 even means.
Yeah, non-threatening is the name of the game, because the moment people start feeling intimidated or belittled,
they're gonna shut up.
They shut down. Yeah.
And that's one of the cool things is, outside of yourself, there's a lot of people in that group that are very intelligent and know what they're doing, and
generous.
Yeah, and generous with their time and their information and their knowledge, and it's a really cool,
that's why I do a one-on-one interview with everyone. No one gets into the group without going through me first.
Nice.
So it's laborious, but they're also people like you.
Yeah.
So then now you get to like lock arms with people that you don't really have to question whether or not they're just rainbow chasing crazy people.
Right.
They're good Main Street folks.
Yeah. Protects the culture of the club.
100%.
What are a few of the key takeaways you hope our audience gets out of our conversation?
Well, I hope that they can suspend any conjured up narratives that they've heard about crypto. I hope that they can maturely compartmentalize the good stuff and the bad stuff. And I hope that they are not, I hope they don't have cognitive dissonance, right? I hope that they're not 52 years old. They've got a retirement account, but they want to play catch up mode. But man, crypto seems like it's too big of a bite, and I can't consume that. I can't digest that. But I really need something that's going to help me get to where I want to be for retirement. I hope they don't just not do it because it just seems like a challenge.
Right.
Everything that I have in my life that's wonderful, especially through crypto, I had to push through it.
Mm-hmm.
And usually the thing that you're procrastinating is the most important thing you've got to be doing. So
that's been very true in my life as well.
Sure.
It's the battles that you have to go fight to get to the good thing on the other side of it. Anything else you want to touch on? Any other topics you want to cover?
I would just reiterate to everyone, to practice self-autonomy in this space. You do not need an Ivy League degree to be successful in crypto.
Mm-hmm.
You need, I'll tell you the spectrum. Everybody wants results, but in order to get results, you've got to take action. And that's where most people can't get to. It's almost like the pole vault, where you put the pole, you finally ran down the track and you put the pole and you go over the pole vault bar and get that result. To get that result, you got to take action. But to get to action, you got to have confidence. I got to have confidence I can run down that runway. And in order to have confidence, you need clarity. And I would venture to say that most people listening to our podcast are in the I don't know what I don't know stage.
Mm-hmm.
They don't have clarity. They know this thing's good. BlackRock and Fidelity's doing it. But how do I do it for little old me?
Right.
That's where I think most people are stuck. And unfortunately, that's where they'll stay before they get to action, and then the bus has left the station.
Right. They missed it at that point, and they don't understand that. You touched on it earlier as well, as you can have $50 and go start playing. You don't have to have thousands or hundreds of thousands of dollars, and
100%. Yeah.
Anybody can participate in.
Yeah. No minimum investment requirements.
Yeah.
Just practice. Bullet, cannonball. Try it out.
It's one of the things I like about it is that anybody can do it as long as they're willing to go out there and learn a few basic skills.
Yeah. And funny enough, human nature doesn't like to approach what it doesn't already have. And so it's pride. I mean, at the end of the day, if you can humble yourself and go, you know what, I'm going to learn a new skill, that's when you see progress.
Well, I appreciate your time and being here. Big shout out to Donovan and Mid-South Avionics for hosting us today. How can people get a hold of you if they want to be a part of the program or learn more about crypto?
Yeah, very specific, because I've got 1,000 imposters online that try to act like who I am, especially on TikTok. They can follow me on TikTok at Investing Yall, Josh Rhodes. They can find me on YouTube. Just Google or YouTube search Crypto Yall. Or if you just want to get straight to it, go to cryptoyall.com and click on the big orange button and watch my 12-minute overview video. And then if you like what you see on that video, my story, the flywheel method, etc., it'll tell you how to schedule a one-on-one video call with me.
And we'll post those links in the show notes. So, Josh, appreciate your time today. Look forward to seeing you again.
My pleasure. Thanks.